What if the strength or weakness of today's economy decided the future of your home's value? As 2025 unfolds, the U.S. economy is sending mixed signals. Growth is slowing, inflation is sticky, and mortgage rates are finally easing a little. But what does that cocktail of change really mean for real estate? Are we heading for another housing boom, a market freeze, or something entirely new? In this video, we'll break down how every economic shift, from jobs to tariffs, could shape your real estate decisions this year. So, without any further delay, let's get started. The economic pulse of 2025. The U.S. economy in 2025 feels steady but slower, much like a runner catching their breath after a sprint. GDP growth is cooling to around 1.8%, 2%, down from the faster pace of 2024. This slowdown isn't bad news, it's a recalibration. Business investments, especially in tech and AI, remain strong, helping balance weaker consumer spending. Inflation hovers around 2.9%, showing progress but still enough to make borrowing expensive. Job growth softens, and unemployment edges toward 4.5%, signaling that hiring is cautious but ongoing. Experts describe this as a soft landing, not a recession. In simpler terms, 2025's economy is like a plane descending smoothly. Steady hands are guiding it, but everyone's watching the runway closely. Inflation and interest rates. Inflation is the invisible force shaping everyone's budgets in 2025. Prices aren't rising as quickly as before, but they're still sticky, keeping the Federal Reserve cautious about cutting rates too fast. The Fed's careful moves are paying off. Mortgage rates are expected to fall to around 6.7% by year's end, down from the high 7s we saw earlier. That small drop could save homebuyers roughly $40 a month on average mortgage payments, opening doors for more first-time buyers. Yet it's a tricky balance. Lower rates risk reigniting inflation, while higher ones slow growth. For real estate, this balancing act is key. Every fraction of a percentage point can shift affordability, inventory, and buyer confidence across the nation. The job market's ripple effect. Jobs fuel everything: confidence, income, and ultimately the housing market. In 2025, unemployment is ticking up slightly to 4.5%, signaling a slower pace of hiring. That may sound small, but it influences millions of wallets. Sectors like construction, retail, and manufacturing are cooling as trade tensions and higher tariffs weigh on costs. Meanwhile, the tech and AI sectors continue expanding, driving job growth in cities like Austin, Boston, and Seattle. This uneven recovery means migration patterns are shifting. People are leaving expensive high-tax states for more affordable, job-rich areas. For housing, this matters. As jobs move, so does demand. In 2025, local economies, not national trends, will determine which housing markets thrive and which struggle to keep up. Housing prices. After years of sharp increases, home prices in 2025 are finally catching their breath. Experts predict price changes of between 1.7% and plus 3%, depending on location. That's a far cry from the double-digit jumps of the pandemic years. More sellers are returning to the market, boosting inventory by over 30% compared to last year. This gives buyers more choices and softens bidding wars. However, affordability remains tight. Property taxes, insurance, and maintenance costs still bite into budgets. In high-demand areas, prices are holding firm, but in overheated regions like parts of the Sun Belt, small declines are emerging. The good news? This isn't a crash, it's a long overdue correction, helping to restore balance between buyers and sellers. Regional real estate winners and losers. In 2025, not all regions are created equal in real estate. The Sun Belt, once a booming hotspot, is cooling as affordability drops and insurance costs rise. Meanwhile, the Midwest and Northeast are gaining attention for their stability, lower prices, and solid job markets. Cities with strong tech, healthcare, or manufacturing bases like Columbus, Raleigh, and Pittsburgh are emerging as new winners. Coastal markets, still expensive, are seeing slower growth but remain attractive to luxury investors. The pandemic-era migration trends are fading, replaced by practical moves driven by cost of living, remote work balance, and job security. Geography, now more than ever, defines opportunity. Commercial real estate. Commercial real estate is rewriting its own rulebook in 2025. Office spaces continue struggling as hybrid and remote work remain part of daily life. Vacancy rates inch higher, especially in older buildings. Yet opportunity thrives in modern tech-enabled spaces that offer flexibility and amenities. Warehouses, data centers, and senior housing are outperforming, driven by e-commerce and an aging population. Investors are focusing on properties that support new lifestyles rather than traditional business models. Even though the commercial market feels shaky, experts believe rate cuts and renewed business spending will stabilize it. The future of commercial property lies in adaptation, not just location. Smart upgrades, efficient designs, and niche investments are the new keys to long-term success. How tariffs and trade tensions impact real estate. Tariffs and trade tensions quietly shape the real estate world in powerful ways. When tariffs increase the cost of materials like steel, lumber, or electronics, builders face higher expenses, and those costs trickle down to buyers through higher home prices. Trade disputes can also slow construction timelines, affecting supply and availability. On a larger scale, tariffs influence job markets, business investments, and even population movement as industries adjust. When global uncertainty rises, investors often turn to real estate for stability. Understanding how these global forces ripple through local housing markets helps buyers, sellers, and developers make smarter, forward-thinking decisions in uncertain times. The psychology of buyers and sellers. In 2025, emotions play a huge role in real estate decisions. Buyers are more cautious now, carefully comparing prices and waiting for the right deal instead of rushing in. The fear of missing out has faded, replaced by the desire for stability and value. Sellers, aware of growing inventory, are becoming more realistic with pricing, offering incentives to stand out. Confidence is returning slowly, especially among first-time buyers eager to own despite challenges. The market's mood has shifted from panic to patience, where data, not hype, drives decisions. This balance of logic and optimism keeps real estate grounded and steady. Smart strategies for buyers, sellers, and investors. In 2025, success in real estate depends on strategy, not luck. Buyers should watch for late-year mortgage rate dips and target regions with steady jobs and affordable prices, like the Midwest and Northeast. Sellers need to price competitively. Homes that look like good deals will move faster in a cautious market. Investors should prioritize long-term cash flow over quick flips, focusing on energy-efficient or senior-friendly properties that meet evolving needs. Diversifying across property types can reduce risk, while patience and solid research can boost returns. The smartest players this year will think ahead, act wisely, and invest with purpose. The road ahead, real estate beyond 2025. As we look beyond 2025, the real estate market seems cautiously steady, not stormy. Gradually falling interest rates and cooler inflation may help buyers regain confidence and affordability inch upward. Builders could ramp up new projects once material costs and supply chains stabilize. However, long-term challenges, like labor shortages, zoning limits, and tariff pressures, will still shape the path forward. The key to success lies in flexibility, staying informed, using data, and adapting quickly to change. Real estate's next phase won't be about explosive growth. It'll be about steady progress, resilience, and smarter decisions guiding every move toward a balanced future. The economy in 2025 isn't collapsing, it's evolving. Slower growth, easing rates, and shifting buyer confidence are reshaping real estate into a smarter, more balanced market. Whether you're planning to buy, sell, or invest, understanding these trends can help you stay one step ahead. If this breakdown gave you clarity, don't forget to like, share, and subscribe to our channel for more insights. Thanks for watching, and until next time, stay informed and stay inspired.